Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin. Before I start talking about the scenarios on the lower time frame, I want to talk about the daily time frame and the support resistance areas, because you can see we have the lower box here acting as good support throughout the range, but now it acts as resistance. A good sign of strength on a daily time frame to switch the probabilities to bullish on the daily would be for price to close daily candles above this support resistance area, preferably retesting and then break the structure once more to look for price to move towards the upside, something that we already did after the 56k low. Moving to the upside, retesting here with lots of bullish CVD divergences, and then move towards the upside of the range. If we then zoom in to the lower time frames on the 1 hour here, then the bullish scenarios start to become very limited because of all the three wavy structures that we have towards the up as well as the downside. So we have to start thinking about diagonals. Now, preferably, I really start to think about diagonals when a wave 4 is finished and we start moving for a wave 5, because diagonals never really have the highest probabilities until a wave 4 is pretty much in. But I do like to show them to you. First of all, the diagonal here, 1, 2, 3, 4, 5. All of the waves in this case are zigzag family structures. What does lower the probabilities of this diagonal is that your wave 3 is longer than your wave 1. If you take a trend-based fib taken from the low to the high of 1 to the low of 2, toggle on the 1-to-1, you can see that the 1-to-1 has been hit. It is not an invalidation, but it does lower the probabilities for a diagonal because it remains uncommon. Now in this scenario, you want to count a 3-wave move down in 4 and then another zigzag to the upside, 3-wave move up in a wave 5. In other words, if this move to the downside is going to be an impulse to the downside, which at the moment it looks like on the lower time frames, more about that in a second, we need to see a retracement and another move to the downside, right? If this move just continues to the downside like that, then likely this diagonal is going to be invalidated. The second diagonal here is a smaller diagonal. So in this case, we have a wave 1, 2, 3, 4, and look for a wave 5. This diagonal can then either be in a bullish scenario, a wave 1 for a 1, 2, 1, 2 continuation, or this is a wave C in the bearish scenario for a wave A, B, and a wave C. However, you still expect this high to be taken to then finish the diagonal. But here we pretty much have the same problem. You can see that wave 3 is longer than wave 1. Take a trend-based fib from the low to the high of 1 to the low of wave 2, and you can see we broke the 1-to-1. Again, it is not an invalidation, but it is not pretty, right? Then for wave 4, we're looking for proof of support because we don't want to move too far to the downside. We don't have too much space. If you take a channel from the high of 1 to the high of 3 to the low of 2 here, we don't want price to move towards the lower trend line over here. That would be invalidation for this particular diagonal, contracting diagonal. And preferably, we still see a more solid 3-wave structure in wave 4. The final diagonal, which arguably is the ugliest one, would be a wave 1, 2, 3, 4, and a 5-wave structure here, where wave 5 overshoots the 1-3 trend line, which is quite common. But of course, if you look at the diagonal, it's definitely not the prettiest structure. But in this case, we have a finished C or 1. And the confluence with also the other scenarios is that you're then looking for price to move down. After an A, B, C, you would expect continuation down, meaning lower prices. And if you count this as a 1, 2, 1, 2, well, then your most common target area is the 0.5 to the 786 target area, which is still to the downside as well. Looking around this target area, you can see that I have some support, the blue box here between 55.7 and 55.9k, so a bit of additional support. And also to the downside, we have a daily naked point of control at 57.2k. These are the two areas that are most interesting to me. If you do pull a volume profile of this range, you will see that we also just around this golden pocket here have the point of control and the value area low. So in confluence with the golden pocket, always an area of interest, of course. Now, the final bullish scenario also, again, leads to first a bit more downside, which is that we have an impulsive structure to the upside and look for a three-wave corrective structure, a W, X, and then a wave Y to the downside, wave Y being a flat, rejecting at the most common target area for a wave B in a flat, 3-wave A, 3-wave B, 5-wave C. What is a bit of an issue with this scenario though is that wave C by far most commonly takes the low of A, which means you're going to fail to hold price at support, and below here we first of all don't really have a lot of support, and it's also very close to the invalidation, so it's definitely not preferred to go all the way down there. The only way to really move down it would be to wick this low and have a swing failure pattern, wick it, close below, and then move to the upside. And in that case, you want to move back above this box because it starts to be very important to look for solid signs of strength because of the move we have to the downside and the probabilities, which are kind of looking for a retracement to the downside as well. Now, in the bearish scenario, we are looking for a three-wave structure, either a finished ABC, as mentioned earlier, continuation down, or a continuation of the range where we have a bigger sideways structure over here, and we have a 5-3-5 ABC. That would be another way to still take out this high here, moving towards a higher point of control, 60.9K. Or we have a continuation of the range in a W, X, and then a wave Y, after which we then move towards the downside. Side note, an ABC also causes price to move down afterwards. On the 15-minute time frame, this is something that I have been keeping an eye on at the moment today. So we had the highest amount of volume in the recent move to the downside here. And from an impulsive perspective, preferably the highest amount of volume is in your wave 3. That is by far most common. So therefore, I preferably count the two ranges above as a double 1-2, count this as a 3, and then look for 4-5-4-5. Of course, if price would move to the downside and the volume increases, then we are going to label this different and preferably move this wave 3 to the downside, right? So here we then currently have a finished 4, 3, look for another 4, and then eventually a 5 to the downside. We do have that daily naked point of control, which is going to be very interesting because preferably in this particular impulse structure, it holds. So we want to see proof of support, right? Now, what am I looking for personally? What I like to see is price hitting this level, move and grind on top of this level or towards the upside, and keep an eye on the CVD divergences as well as lower time frame structures. If we can count an impulsive move to the upside, 1, 2, 3, 4, 5, then the retracement, maybe with some bullish CVDs, can be an interesting potential long to move into the fibs that you see on the chart here, which are taken from the high to the low that I have over here at the moment, but now I actually have to move them down a little bit further because price is moving to the downside. So you can see that the target is then going to change as well. But because of the range that we have over here, the probabilities do increase that we are moving towards an ending structure. In other words, the probabilities, because of the ranging move here, start to increase to look for some signs of strength and a bit of a retracement back to the upside. But then again, proof of support, very, very, very important. Now, this range can also be divided into, again, simple support resistance areas, which is what you see on the chart here. So I have, again, 3 boxes on the chart. That's the way I like to do it. I have the upper support resistance box, nicely respected, support, resistance, resistance, broken, deviation, and back below again, a little bit of support, but that failed. Then we have the one in the middle, support, support, resistance, resistance, once again, of course, broken up and down. But you can see there's a lot of action in this box as well, and the one in the middle is between 56.6K and 57K. Then we have the one towards the downside over here, where you can also see a bit of structure, resistance, support, and then support. So that is the box towards the downside, 54.7 to 55k. Losing that, of course, would be a problem. Now, this move to the downside so far is supported by bearish CVD divergences. The first ones were visible over here, and then more locally we also had bearish CVDs in this range, but these have now played out. So now it's all about looking for local signs of strength. I do realize that you might on the CVD chart see bullish CVD divergences, which is what you see here. If you zoom out, higher low in price, lower low on yellow, right, as you can see. However, as price is moving to the downside here with local bearish CVD divergences, which then have priority, I want to see local signs of strength. So personally, I am not interested in the CVD divergences that we have over here. I want to see local bullish CVD divergences. If price then moves to the upside, higher highs, higher lows, and some bull CVD coming in, that is when it starts to become more interesting to me. If we then finally look at the probabilities, then on the 1 hour time frame, which is pretty much the range that we have been talking about, the bulls are at the moment running a little bit out of options with all the three-wavy and overlapping structures that we have here towards the upside. And of course, that then in turn does increase the probabilities for this bigger range over here to be a bearish structure, which in turn increases probabilities to then still see lower prices on the higher time frame. Now, I did mention that on a daily time frame, if we want to switch bullish, we have to pass that support resistance area, move above 63.8k preferably, test the support resistance area support, look for signs of strength, move to the higher or middle part of the range, right? So it's quite simple on a daily time frame. Being below the support resistance area is arguably, of course, a bearish sign. In general, though, the probabilities at the moment are higher to look for a bit of a move to the downside. So we have a potential impulse. Then, of course, you can have a retracement, but then you would expect another leg towards the downside. So in general, looking for a bit of a move to the downside, also because the diagonal with the longer wave threes, you can't really give great probabilities to these type of diagonals, right? Unless we have more information. And in a finished diagonal structure here at the high, you have a bit of a weird structure, right? 1, 2, 3, 4, and a wave 5. If we have these sideways WXY, you also expect a move down. So in the diagonal ABC, where we had that odd wave C structure, you would expect price to move towards the downside already. Doesn't have the highest probabilities, though. Continuation of the range would have higher probabilities, really. But then in the WXY, WXY, or the bigger ABC, you still expect a continuation of the range and price to hit some support levels that we have to the downside. Now locally, 15-minute time frame here, looking to finish an impulse to the downside and then look for a bit of a retracement back towards the upside to hit the fib targets here. Look for proof of resistance, of course, and then we could be looking for another leg down to support. Proof of support, first of all, with this leg to the downside is necessary. We have a daily naked point of control and some extra support below, and that is interesting because at those areas, I'll be interested to look for potential longs if I see what I want to see, which means proof of support. We have a daily naked point of control below price. Interesting to see what price does if we do hit it. I hope you're going to have a great evening. It's going to be England versus the Netherlands, and I am from the Netherlands. It is late. I'm late for the game, but I'm going to start it at the beginning. Of course, I just wanted to give you this update. So thanks for watching. Have a good evening as well. And I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.